Hi, and welcome to the MAPsignals Big Money video series. You want to know what really moves stocks? It's the big money. And what is that all about? Well, you're about to find out.
So let's go ahead and talk about ETFs.
ETF.
Now that is a hot buzzword,
That's
right?
it, yeah.
Everybody wants to talk about ETF flows and all that, but really what happens on an ETF desk? I mean, we ran an ETF desk, and what would end up happening are these FAs, which is a financial advisor. They would put these big orders together, these huge blocks.
Your broker.
Yeah. They would call us, right? This is back in the day, and they would say, hey, Luke, I need to buy 800,000 shares of some illiquid ETF. Where are you on that thing? And so I was the sales guy, right? So then I would go talk to my trader, and then he would make a risk market. And that's how this would trade. So if the screens were, say, 12 cents at 15 cents, we might show someone 12 cents at 16 cents. And then this big block would go up, and all this volume would trade. And that's how it used to be. But now a lot of that stuff is automated.
Yes, but the important thing about that, where you're selling something higher than where you think you can buy it on the screen, right? Well, what are you doing? You're taking that spread. That's how these big Wall Street desks would make money, right? I'll sell it to you at 16, and then I'll go buy the individual stocks of the ETF at an equivalent of 14 cents. I make 2 cents on 800,000 shares. That's how they would get paid, right?
Right.
Did that all day long.
Yep.
But what was important is when you traded that ETF, what happened to the volume in the stocks?
They would explode. And I remember people would call the desk, anybody hearing a reason why XYZ stock is moving? And the fact is, it was one of the ETF baskets were going. And somebody was putting on their hedge for their ETF block that they had just priced.
Right, so big money in this case could actually be a bank desk facilitating a big client. And a big client, let's think of an example. Do you remember way back when there was the biggest client in the ETF market?
Yep.
And people, bank desks across Wall Street would hope for that order flow because they kind of knew what was going to happen, right?
Yes, I mean, what would happen is you have these model managers that controlled billions of dollars, and they still do. And then whenever that manager would make a move, anybody who was following that model would have to make that move throughout the end of the day. And so you would see the same blocks going up throughout the day, and all that buying pressure would lift the stocks. It would lift the market in some cases, but the whole thing is no matter what, who the big money is, if it's a hedge fund, if it's an FA, if it's a mutual fund, we're going to see that flow. And a lot of those characteristics that we learned on the desk, while we're not on the desk anymore, we still are able to see some of that chunky order flow that's moving these stocks.
Right. And why is it important to pay attention to big money stuff like this? Well, think about it this way. There's a ripple effect. You come in, you put up a big block, the shares start buying, other people come in and start buying, and that creates this momentum which might last for weeks or days or years. So that's just a great example of how ETFs can be the big money in the market, whether it's the big client who's the money manager or the bank desk or the individuals who are coming in to trade after it. Cool, huh?